2020 has been an incredible year, and I don't necessarily use that term in a positive way. Certainly, there are some positive things that are coming to light this year, but there have also been a lot of negatives, especially for the U.S. economy. Now, some of it has been problems that have been long-standing problems that are being revealed this year, whereas in other cases, the changes that have been made, certainly to the economy, the shutdowns that have taken place, especially for small business owners, have been devastating. Today in our sponsor spotlight, we're going to talk with a company that actually can teach you how to resolve some of those issues by becoming a bank for yourself. I know, when I first heard it, it sounded weird too. But after hearing about what this company does, I'm pretty impressed. It is an incredible system that they create that teaches you how to bank the same way that extremely wealthy people do it, and also the way that Fortune 500 companies do it. And it's not as hard as you think.
There's only one rule of monopoly that really matters, and that's 4 houses equal a hotel. There are people out there in the real game of money, in real life, they're playing that game of money so well, you don't realize the game they're playing.
I'm Ben Swan. This is our sponsor spotlight. Well, welcome to the show. As I said, it's been kind of an incredible year so far, and it's certainly with the economic lockdowns across the country, there's been a lot of concern about what to do for small businesses. Remember the PPP program, the Payroll Protection Program that was created by Congress in order to save small businesses. And when that money that flowed into that program, around $300 billion the first time around, and then another $300 billion the second time around, give or take, when that money flowed into the program, it was supposed to go to small businesses, but it was banks that handled the loan applications. And remember, in that first round, the banks actually prioritized some of their most important clients. They actually made sure that the biggest companies got the money first. Maybe the companies that in many cases didn't need it as much got the money first, whereas small businesses were left kind of on the hook there. We've seen this happen time and time again. Banks do not seem to be really friends with small businesses. They certainly don't fight to protect them the same way they fight to protect big corporations. But what if there was a way to get around the current banking system? Because we all know the banking system doesn't work. There's no question about it. It's why I'm such a proponent of cryptocurrencies, legitimate crypto projects that attempt to actually usurp the authority of banks and create peer-to-peer transactions. And what if there was a way, though, through your business or in your own personal life, to become your own bank using insurance? It might sound confusing, it might even sound a little bit complicated, but today we're going to spend some time talking about how to do that, because it might not be as complicated as you think. It certainly wasn't as complicated as I thought, and it's a pretty remarkable system. So joining us now to discuss is Jim Oliver and Bob Burnett with CreateTailwind.com. Guys, thanks so much for being here, and I just want to begin by having you both kind of share who you are and how you got involved in this business.
Okay, it's Jim Oliver, and I've been doing wealth coaching and wealth management this is my 32nd year. And I started off the first 15 years as a traditional full service fee-based financial planner. And about 15 years ago, changed my direction to showing people how to make money outside and beyond Wall Street. And let's see, I live in Southwest Florida, and teach people the infinite banking concept. And I was mentored by Nelson Nash personally for years, and learned his insight to Austrian economics and infinite banking and seceding from the banking system.
Yeah, I'm Bob Burnett. I actually spent most of my career in technology, primarily in the personal computer industry. But about a dozen years ago, I actually got introduced to the infinite banking concept by Jim, and became a customer, and then really saw the value and benefit of it. And about 3 years ago, decided to get licensed and help teach people the same concept, because I believe in it so much.
So the name of the company is Create Tailwind, but obviously the kind of philosophy you're putting into practice here is something called infinite banking. Jim, can you explain exactly what infinite banking is and how it applies not only to the banking system, but to all of our lives?
Yeah, and that's really where the name comes from, because people are facing a financial headwind, meaning they're paying interest to someone else for everything they buy, or they're giving up lost opportunity cost for every single thing that they buy. And because of that, we're all really facing a headwind. What infinite banking does is it creates a tailwind by reversing that flow of money and eliminating lost opportunity cost. So getting that interest to flow back to you instead of some other financial institution, and recapturing the lost opportunity cost that you might create by paying cash. That's what infinite banking is all about. Creating a banking system where you write checks to you instead of the bank. And the more that you do that, creates an ever increasing pool of money for you to use for your personal life, for your business life, for your investment life, for your savings life. And you're in control instead of the bank.
So when people hear this, obviously they're going to have 1,000 questions about exactly how this works and what it consists of. So just to give kind of a short summary, Bob, of what this concept is, because we're hearing a lot of terms here about writing checks to yourself and not paying interest to banks. And I think most of our viewers, if not all of them, believe in this concept on some level, right? That they understand the banking system, if not just in America, but worldwide, is a gamed system. And it's not a system that is gamed for their benefit. So let's start with the very basics here of how this works, because it really kind of revolves around insurance, does it not?
As you said, Ben, kind of disassociating yourself from the traditional establishment mechanism of money flowing through a bank and flowing through Wall Street is really at the core of infinite banking. And at the center of all that is a specially designed whole life insurance contract with a mutual holding company. And that contract allows you to keep your money in a place that has constant compounding interest, tax-free, and the money is instantly accessible, much like a savings account or checking account at the bank. It's available on demand. All the wealth that you retain within that contract is also off the radar of the IRS and in general not accessible to creditors. So it really is a way of kind of pulling your money outside of that traditional system and building wealth in a place that really only you can access.
When you use the term whole life insurance, people are going to say, wait a minute, so what? This is basically a life insurance policy that I go out and take and I'm drawing out of it? But that's not really what it is. I mean, as you guys have explained this to me, the life insurance and certainly the death benefit that most people associate with life insurance is a very small part of this. Correct, Jim?
Absolutely. It's just where we hold the money. It's really your behavior that you're going to see the biggest reward. And the reason we use the life insurance contract is because there's some tax advantages to the life insurance contract. Like Bob said, there's constant compounding, uninterrupted, every single day, guaranteed, while we go out and we get to use the insurance company's money to build our wealth. So we're designing the insurance contract like a corporation would do inside of COLI, corporate-owned life insurance, or bank-owned life insurance. BOLI, we're not designing it like the consumer life insurance agent designs the contract. We're designing it for cash, not death benefit. Although because of life insurance laws, we need to have that death benefit to qualify as life insurance, and there's a lot of tax advantages to it qualifying as life insurance.
Okay, so you help someone to essentially get this life insurance policy, and they take their own money and they place their own money into this policy, correct? Is that how it works, or can you explain how that part of it works?
Yeah, and so it's after tax dollars go into the insurance contract, and then done right, it will never be taxed again. So it grows, you get to use it, you have access to it. Down the road, you could create an income stream if you wanted to, all without paying tax. And Ben, we know taxes are going up, right? So right. It's a protection, and it's really, you get two sides of the ledger though. You get that money that's protected inside that insurance contract in that tax shelter, and you get to collateralize it, meaning you get to use the insurance company's money guaranteed to go buy assets, not instruments. So assets that you know, like in areas that you have expertise or can borrow expertise, and you can go buy real estate, or you could buy your vehicles for your business, or you could buy your personal vehicles, or whatever it is. That's the part that we help you with, and we coach you. What is the best use of your system?
And that's essentially what Create Tailwind is, right? You guys are coaching, you're walking people through this process of how to do this. You're not the insurance company, right? So this is not your company that does that. Instead, you're connecting essentially people with these insurance companies, and you're taking them through the process step by step so that they're not trying to figure this out on their own, right, Bob?
That's correct. And, we're not compensated at all by our clients. Our compensation does come from the insurance companies. So there are no fees, and we're with people not just before they buy the contract from us, but after too. We're here to help guide them on how to use the policies most effectively, whether that's helping them set up amortization schedules for repayments, or how to collateralize a loan with a third party. All those sort of things are part of the services that we provide.
You know, when I first started talking to you guys about this, my head kind of exploded, because it's an entirely different way of thinking about money. It's an entirely different way of thinking about, as you said, the role of the bank and you as essentially the bank. Can you guys give some examples of how this would work? Just, I understand they're hypotheticals, or maybe you can give some examples without names of people you've helped to do this. But what is the process like for somebody who comes into it? If somebody comes in and gets a policy, what's the average policy size, and how does it work over the course of 10 years, 20 years, 30 years?
The average size of the policy really varies greatly on the amount of money that the client has, and it's their banking system. So we typically don't tell somebody how much they should put into their banking system, but Ben, we have people that are doing a few $100s a month, and we have people that are doing millions of dollars a year flowing through their system. And what they do is we establish a dollar amount that they want to, quote, capitalize their bank with, right? And you could think of that kind of like deposits at a regular bank. The bank needs those deposits to go loan to someone else to then start this whole banking process and how they profit from the banking process. Well, we capitalize it, and let's just use $100,000 as an example. So we put $100,000 a year into our banking system, but then we take that money, our cash value, okay, and we collateralize it and use the insurance company's money to go and take care of obligations or opportunities that we have. And then whatever cash flow those opportunities generate, or whatever payment or recapturing of interest that the obligation would create, we flow that back through our insurance contract, thus reducing our lien and increasing our cash value available, so we could do what? We could do it again. So we're using this money over and over and over again, like the bank does. And Ben, when you make your mortgage payment, what the bank does is it pools it with my mortgage payment and with Bob's mortgage payment and a lot of other people, and they loan it out again. And they do this over and over, and they create something we call velocity of money. And by doing that is to get your money to move faster and faster and faster. And what happens is you establish this money pool, and then you start using it. And one of my mentors and our mentors, Bob and I, R. Nelson Nash, in his book, Becoming Your Own Banker, on page 14, he talks about imagination. And imagination being so important, that how would you use this in your life? And everyone is different. Bob uses his system a little bit differently than me. I use my system a little bit differently than you would. So it's creating that money pool and then utilizing it.
And I'll add that The other thing that somewhat magical happens about having a money pool is that opportunity has a tendency to find you. I may not be I'm paraphrasing, not the exact quote from Nelson Nash, but it is kind of a magical thing that happens in your life when you create a pool of money. People looking for that money and opportunity looking for that money seem to find you. And I don't know that it's a divine law, but it sure seems to hold in practice.
So there's clearly a lot of education that has to go into this when you have clients who come to you. I assume most people who come to you aren't versed necessarily in Austrian economics or in a lot of the kind of the philosophy behind this. What has the process been like for taking people through this? Because I know there are people who are going to be watching who are going to say, well, I don't really understand money, or I don't really understand all that banking. That's way above my level of understanding. So this is for someone else. But it's not. I mean, this is something where anybody really can do this if they understand the principles. Is that true or untrue?
Absolutely. You think of it like this, Ben, is the first thing we do is we kind of expose how the game of money is really played. So we spend the first 30 to 45 minutes with someone explaining how banks make money and how other people make money off of most consumers. And we talk about the IRS, we talk about the banks, and we talk about Wall Street. And, you know, Ben, it's kind of like this. We've all played the game of Monopoly, right?
Right.
And typically, when you play Monopoly with someone who really hasn't been taught how to play Monopoly to win, they're playing to have fun, which is great. But they're focusing on the side of the board. Who's got the most money on the side of the board, right? Under the board, everybody puts their money under the board. But that's not who's winning the game of Monopoly. There's only one rule of Monopoly that really matters, and that's 4 houses equal a hotel. Because if I put hotels on my properties, I'm going to bankrupt the other players, take all their properties, and I win. So, but I'm playing a game when I'm playing Monopoly differently than everyone else. There are people out there in the real game of money, in real life, they're playing that game of money so well. Number one, you don't realize the game they're playing. And number two, they're playing so well, you don't even realize they're playing. So we need to get our clients to understand that. And we like to say, if you understand what's happening, then you'll know what to do. And so we try to show our clients in the very beginning, the first 30, 45 minutes, 60 minutes, what's really happening out there with your money. And if you know you have a problem, or you know that it's probably not happening the way that you would like it to happen, and you've been listening to the IRS and the banks and Wall Street's, what we like to call the reassuring lie, once you see the truth, you can't unsee it.
And what is the reassuring lie that banks are telling you?
The reassuring lie is, hey, have all of your money automatically deposited in somebody else's bank so they can use it. And that you should have a certain portion of your income diverted to Wall Street and let somebody earn money from you for 20, 30, 40 years, putting your money in Wall Street and hoping that you don't lose all your money, or that in your hope that your money grows, and you hope that you don't make mistakes, or that your advisor doesn't make mistakes, or there aren't tax changes, or you know what the tax rates are going to be in the future. You're just hoping that all of that works out. And Ben, you know, hope is not a strategy.
There's somewhat of a path that is perpetuated on society of, you know, you get out of school, you start earning money, you start placing that money typically into a qualified plan, a 401k or an IRA. And that's, by the way, a lot of the money that Jim talked about going to Wall Street goes through that mechanism. And then, you know, save money and go buy a house and, you know, live the American dream, right? And then you retire and, you know, you drink pina coladas on the beach. But that rarely works out for people. It's just not a it's the dream that all the pamphlets when you walk into a typical financial advisor will tell you will happen, but it doesn't happen. Because there are so many places between the banks and Wall Street and government that are sucking on you as you try to build that dream, that it just doesn't work for almost anybody.
Well, and I think it's fascinating what you both said there about the fact that the system is not designed to help you. It's designed to take what you have to help themselves, and they promise that you'll get something too, right? Whereas the system that I understand that you guys are creating really says be dependent on yourself and utilize these systems for yourself. One thing I think is important is when you hear about financial advice or financial advisors, there's always this fear that people have that they're going to get taken advantage of. The reassuring lie that you mentioned, Jim, about, well, don't worry, the bank won't do that. Don't worry, Wall Street won't do that. And yet we see what Wall Street keeps doing over and over and over. We see what the banks just did during this PPP loan process during coronavirus, where essentially they prioritized their biggest clients, and the smaller businesses that really needed help got shut out of that process. So the banks were not protecting them and looking out for them. How does somebody get started in this? If they say, okay, I want to get involved in this, it's an interesting idea. I'm not sure what the risk level is, though personally, from what I've heard from you guys, there really isn't much risk level here. But how does it work? How does somebody start down this road?
Well, the first thing that they do is they set up a free session just to kind of get an overview. Then we typically send them videos or articles or a book, and to further their kind of reading, depending on their kind of where they are, whether they're a business owner, an individual, a real estate investor, etc. And then we get together, answer their questions. We put together numbers to show them what it would look like for them based on their age, underwriting, financial situation, everything else. So we give them kind of a custom plan. And then there, obviously, because it is insurance, there's an underwriting process. So we have to apply for the insurance to see both physically and financially, to see if the insurance company will accept the amount of capitalization and that they're healthy and they can qualify for the insurance. By the way, the insurance doesn't have to be on them personally. It could be on anybody that they have, quote, insurable interest on. And people grow their system of banks. Just like a bank doesn't have one branch, you want to have multiple branches of this. And so we start them with their first branch. They get approved, they fund, and then we put the money to work. And that's where the coaching comes in. And again, like Bob said earlier, they never pay us $1 for our coaching or our services, but you need the insurance contract. So to do this, so the way that we get compensated is from the insurance company. And by the way, when we design the insurance contract, we're designing it to be a much lower commission than what a normal, quote, insurance agent would do.
Guys, it's fascinating stuff. Obviously, the website is createtailwind.com. As we kind of close up here, I'd like you both to kind of share with people why you would like for them to learn more about this, why it's a passion for both of you.
Well, yeah, I'll start. As I mentioned, I started as a customer, and I had some good fortune in my life financially, but I also had the misfortune of placing my money in the traditional system. And all of the financial advisors that I had worked with prior to meeting Jim and prior to being part of the infinite banking system failed me. They failed me because of lack of performance. They failed me because of tax structure. And I was very disillusioned. So when I came across the infinite banking system and started implementing it in my own life, it really changed my financial fortunes. And, the reason I'm here today, the reason I have this passion is that I've actually experienced it personally. And at this point in my life, I feel the best thing for me to do is to share that with others.
Yeah. And for me, spending 15 years doing full service financial planning the traditional way, coming out of college and not knowing any different, and teaching people how to put their money in Wall Street, it became obvious. And from a number standpoint, average rates of return, which is what all of the platforms report to their clients and to their advisors, and actual rates of return, or compound annual growth rate, CAGR, is totally different. And so for me, once I made that switch, not only in my life, but my clients' lives, there are hundreds of stories of transformation of wealth and control and reduce stress. And I mean, people that just, I mean, literally get emotional when they're talking about how it's changed their lives. And, you know, I've used this system to buy or start or invest or to be a part owner in 14 different companies now using this system. And I've bought a lot of real estate using this system. And I've bought a lot of cars and all these things. It's changed the way that I think about money. It's changed the way my family thinks about money. It's changed my family's legacy about money and its future for generations. And if legacy planning and generational planning and control to where I'm not stressed about my money, I know where my money is, I know what I'm using it for, and I'm in control. That's why I'm passionate about it.
Jim Oliver, Bob Burnett, guys, thank you so much for your time and your insight on this. Thank you.
Thank you, Ben.
Thank you, Ben.
And guys, thank you for tuning in for the Sponsor Spotlight. Listen, I'm fascinated about what these guys are doing. I hope that you guys found this conversation fascinating as well. You can learn more about what they're doing and set up your own consultation with them at createtailwind.com. I will confess to you, I'm also consulting with them and learning this process for myself, because if nothing else, I want to better understand money and how this system works, not to be used by the system, but to use it. Again, thanks for tuning in, and be sure to check them out, because remember, our sponsors help to create our product, and our product is restoring truth in media. Thanks for watching, and we'll see you next time.